Hello and welcome to the Crypto Club and Digital Assets Weekly Catch-Up on Zoom. It is Sunday, the 19th of March, 2023, and this week we're going to be talking about whatever we end up talking about. We hold these sessions every week, every Sunday evening, 7 p.m. till 8 p.m. UK time, and we talk about whatever the audience want to talk about. So some weeks we'll talk about blockchain, cryptocurrency, DeFi, NFTs, ICOs, STOs, TGs, any other three-letter acronyms really. The sessions are open to novices and experts alike. So if you're just beginning in the crypto space, beginning to learn some of the terms, hearing all these buzzwords and everything, a little bit confused, come along and join us for a future session. There's a link down below on how to come on to the sessions. As you'll see, the sessions are recorded. We put them up on YouTube, so do click on the like, subscribe, comment, but as I say, even better, come along. Anyway, with that, let's see who's going to come and join us today. Stephen, hello. Hi. And Daniel, hello. Thanks for the last minute bit of promotion there. That was really good. Much appreciated. Daniel, you're on mute at the moment.
Okay.
There we go.
Hey, how are you guys?
Hey, we're good, thanks. Only just kicked off, in fact, so that's great. Good of you to both join us. And we've got Luke joined us as well. Hey, Luke. Luke's busy reaching for the mute button at the moment.
Hey, guys. Can you hear me?
Yeah, that's good. Folks, thanks all for coming along today. I just blasted out a quick couple of promos on this, so it's always interesting to see who shows up and what people's experiences, expectations are, and what they'd like to talk about, really.
What is the? Are we mainly talking about Bitcoin reaching 28,000, or what is
well,
the topic?
That's certainly a topic in as much as that happened just before we opened. In fact, I see. Just past 28,300 at the moment, which is no bad thing. So yeah, sure, that's as good as any. The thing about these sessions is that they're completely open to whatever we want to talk about. So if anyone's keen to learn about anything or ask questions, that's fantastic. If anyone's got any opinions about stuff, which is always interesting with crypto prices. So yeah.
Sure. I mean, I have one guy in my whole group that really understands crypto, and he mentioned like a month ago that he expects Bitcoin to reach like 30,000 or whatever, and he's like, and it was like 20,000 or something then. So it would be good for him to join. I mean, because he has an app that works with like a lot of crypto funds and so on, you know. But if you ask me, I have no idea what the value of Bitcoin is. Like,
the reality is there's no real way of having any certainty. It is that everyone's got their own views, their own opinions, their own ideas, and each of them is equally valid. Yeah. But what are people's views on the call today? Stephen, what's your interest first of all?
So my interest was actually just to kind of find out what the format of this event was. I know it's run every week, just to sort of see the type of people who are attending and to sort of see the flavor of the discussion. Yeah, look, I've done a lot of work on blockchain technology, on private blockchains as well as public blockchains over the last 5 years, and currently sort of between roles at the moment. So looking for things and just kind of reaching out, expanding the network, that sort of thing. So it's just really just to get a feel for what's going on as much as anything else.
Cool, excellent. Well, thanks for coming along. These sessions really can vary from week to week. So we have some regulars. So Elena's just joined us. So good evening, Elena.
Good evening.
Elena's fantastic. She's really into the blockchain side of things more than the crypto thing, I think is a fair thing to say. And she's fantastic as well because she keeps claiming that she's a novice, but keeps coming up with some really, really good questions as well, which is brilliant. But yeah, some weeks we've got people who are just complete novices and who are here just to learn. Other weeks we get people who come along and talk about the projects that they're working on. So I get involved quite a lot in the crypto custody space. So not so much on the trading side of things, but more in terms of what you do to secure your Bitcoin or your NFTs or whatever. And we're just about to go live with a digital inheritance planning platform. So you think about how some people have got crypto, what do they do in terms of wills, and what are they going to do if they die, that kind of stuff. So,
well, I guess what the legality of ownership of wallets is as well is a big question, or must be a big question. Yeah,
yeah, particularly so. I'm guessing you're in the UK, Stephen, and in the UK at the moment, there's the Financial Services Markets Bill that's going through the final phases of Parliament. It's on its third reading right now, which is getting pretty close to being complete. That includes things around digital asset ownership and crypto and that kind of stuff. And there is a discussion paper at the moment, which HM Treasury is doing, and a load of that stuff is around crypto asset ownership and all that kind of stuff. So it's all evolving anyway. Hey, Sue, just been joined by Mike as well. Hey, Mike. It's a familiar face. I've not seen him on Zoom for a while. Anyone else care to share what their interest is, what their level is, what knowledge is? Does anyone have any questions that they'd like to open with, or any comments or anything?
Yeah, I mean, so all the major US banks went down, right? So is there going to be another one? Is there going to be a new one, or are they going to recover?
I've got a view, and it's a view based purely on the news that I've read and seen and heard and everything, which is that what the US Treasury did last week, I think was pretty good in that they effectively underwrote a load of bank deposits. So hopefully that stops a bank run happening. However, what Silicon Valley Bank and Signature Bank and a couple of others have kind of revealed is that their balance sheets aren't as strong as perhaps people had thought. And so I think there's still going to be some nervousness. You've probably all seen the latest news about Credit Suisse, where initially the Swiss National Bank agreed to underwrite, I think they offered a loan facility of up to $46 billion as a provision if there were problems. UBS has since made a bid to buy them. I think they initially made a bid of $1 billion, which was something of a low ball, because I think the current valuation of Credit Suisse is around about $8 billion. So I think UBS just put a low number in. I think they've rebid and they've put in a number, I think I saw earlier on, $2 billion now. So there's a lot of uncertainty. And what the US government did last week was putting in this kind of backstop for systemically important banks, and that's a really important thing still, will hopefully prevent more problems happening. However, if anyone saw the interview with Janet Yellen, I think it is, who's one of the, I think she's US Treasury or something, I've forgotten now, where she said that they would only provide a backstop for any bank that is considered systemically important. So if you're a small regional bank and you go bust, then they won't protect them because you're not going to bring down the entire financial system. Whereas if you're BNY Mellon or Bank of America or whatever, then they would do. So quite worrying. I think that there's more to come this week. I don't know if anyone's got any other views or anything.
Well, so the interesting thing for me actually is the extent to which they've effectively ridden roughshod over shareholders' rights here, because there's no vote either from the Credit Suisse shareholders nor from the UBS shareholders, and strictly, for a country which supports democracy like Switzerland does, that's a little bit outrageous, yeah. So I think we're in really quite interesting territory actually at the moment, sort of history being made in some ways. We have to see how it pans out.
Yeah. So Daniel, absolutely. I think just like we don't really know what's happening with crypto, we're not much more aware of what's going on in the fiat world. But what we are seeing is at the moment, certainly the crypto markets are getting livelier right now, which it wouldn't be unfair to say that that's because of the uncertainty in the traditional markets. It was always suggested that crypto might be a kind of a safe haven of people to move some of the funds to in some way. So that might explain why Bitcoin, as you say, went up through 28,300 about an hour ago, I think it was. It's hovering, just checking now, 28,330. So yeah, interesting times, definitely.
So the interesting thing for me, actually, is if you extend the logic of what's happening here, is effectively all the smaller banks end up being consolidated in fewer and fewer larger banks. Now, of course, the logical end game of that is a single bank, which of course plays, I think, quite interestingly into the discussion around central bank digital currencies.
Yep.
And it's clear that the fractional reserve banking kind of framework, needs to adapt. It's not really working. I think there are some interesting kind of conceptual points here, which may well tie into switching to kind of a very different model, and central bank digital currencies have a role to play in that, a big role, I think, or at least that's going to be one of the angles of discussion, to my mind.
I think you're absolutely right. And it's interesting as well. I don't know if people are aware, CBDCs, so central bank digital currencies, just how many projects are underway at the moment. So I shared something a couple of weeks ago. I'll share it again now. This is a map. I hope you can all see that, of all the central bank digital currency projects. And at the moment, it's saying like the UK, for example, has got a couple of projects that are just in research phase. They have actually engaged with a company to develop a CBDC wallet, and they're doing some research around that at the moment. But there's a lot of countries around the world who are either doing pilots. China has got a live scheme already, where they are doing some things with ECNY, so the e-renminbi, I think they call it, or EDMY, which is a central bank digital currency already that they're trialing in some regions. So yeah, interesting stuff.
So no countries have launched one yet. There are no blue countries.
There are about 3 which went live, but they're very small. I think there's a couple.
Bahamas,
I think there's a couple in the Caribbean.
Yeah.
And Nigeria, I think, went live with one as well, but has not been very popular. Where we got Nigeria? I can't see it on here at the moment. It's not showing up. But Nigeria certainly had a live government-backed digital currency, but it was causing a lot of concern, but politically, I think.
Let's go down the garden.
Yeah.
But what it does show is that there is a lot of work going on in this space, definitely. So as Stephen says, as we see more and more banks consolidating, then we may see an inevitable thing of the central bank stepping in and providing something.
So the challenge with that whole framework, of course, is that ultimately, if you extend that to its logical conclusion, you don't need the commercial banks. The technology effectively facilitates the central bank to do everything. But the problem is that effectively, the government is going to have complete visibility over all transactions everywhere. And whilst that might be good for things like collecting taxes, I'm not sure how that reconciles with kind of an open democracy.
It certainly introduces some interesting things on privacy by design, which is something that the UK government has made that statement before now, which might prove to be exactly the opposite of what they're claiming. The bigger thing for me, actually, is not necessarily the transparency or the visibility or the privacy. It's the potential of the programmability. And it's the whole concept that if you've got central digital currencies which are programmed in some way, then that means you can control how they can be used. So at least at the moment, if I've got cash, I can choose how I'm going to spend it. I can choose when, where, how, and everything. if I've now got a value that's showing on a wallet on my mobile phone, then it's not impossible for that value to suddenly be taken to zero, or for it to be limited on where I can spend it, when I can spend it, and everything, which actually is happening with traditional bank accounts right now. Anyone who's dealing in crypto will understand that they've probably experienced already the challenge of actually buying and selling crypto through a bank account, because the banks are cutting down more and more.
Yeah, well, I mean that's a kind of the direction I was trying to go in with my thoughts. If you've got kind of government handing out credits in wallets to people on benefits and telling them that, well, they're not allowed to spend them in the pub, that kind of thing, and that's not going to go down very well, I don't think. And I don't think, I mean, it's just not going to work, is it?
Well, the UK government tried it. They actually had a project in, I think it was 2017, called GovCoin. And GovCoin was an initiative trialled in Manchester or around the northwest of England somewhere, where they actually were paying people the social security or unemployment benefit or whatever it was called. But it was done in such a way that you could only spend it on, like, if it was intended for rent, then you could only buy, rent a property. And it was really interesting because I seem to recall it was blockchain based, so it was kind of crypto in a native form, and the government was pushing ahead with it, and then it got into Parliament, and Parliament got into the discussion debate, and that's where like Labour kicked back saying this is an infringement on human rights and all this kind of stuff, and so the project got shelved. But they have tried it before. They did it in, I think it was 2017 that they were running it. And then you've got in Sweden, they've got the e-Corona project, which was going to be probably one of the first major CBDC projects to go live for a country apart from China. And again, I believe that they were going to go live with that, I think 2020 or 2021. And again, they've shelved it for a few years because of the risk of political pushback in some way. So yeah, interesting. Daniel, you get involved in an awful lot of stuff that I see. Are there any interesting crypto things that you're seeing at the moment?
I don't know. I'm like kind of stupid. I believe in comparison, and that's something that no one really does, and it's a bit difficult to do because, like, if you, let's say, you want to talk about, I don't know, Ethereum and Algorand and so on, like, you need maybe people that really understand what they are, like, and I don't. So, I don't know, like, that's what I want to do, like, compare 10 things. I'm working on a website that will compare, like, 10 things by 10 different KPIs. We'll create, like, a 10 by 10 charts, on different things, because right now I don't like how many transactions per second, what else, like how much time it takes, maybe something else, a lot of things in crypto, like, I don't understand. Like, do you know 10 of anything? Like, okay, you deal with storage, right? You deal with storing crypto, like vaults.
Yeah, so one of the or two of the projects I'm involved in are around private key management. So for anyone who's familiar with crypto, you'll be aware that you typically access the crypto and you spend it and you transact using a crypto wallet in some way. Crypto wallet is usually a piece of software on a mobile phone or a laptop, and it controls the access to the private keys. I'm working on a couple of projects to secure that better in some ways. Go ahead.
Do you know their competitors? Do you have a list of their competitors?
Yeah, so the space we're operating in is kind of the commercial side. So you may have heard of things like Nano Ledger and Trezor, so these like hardware wallets. This is a level way beyond that, much more for like commercial companies. So, hedge funds.
Like Fireblocks.
Yeah, it's Fireblocks. I would consider a competitor. In fact, yeah.
Okay.
Or
So-
potentially a partner.
Do you have,
So is that
do you have
using sort of MPC constructs of key release with 3 tri-parties and that kind of thing? Yeah.
It's that and more. So yeah. So for those who are familiar with how you sign a transaction, you sign a transaction with your signature that's generated from your wallet, and it can be, as Stephen says, what's called MPC, which is multi-party compute, which is usually where you've got several people have to sign a transaction. So for those who remember banks, where you'd have a company bank account and you'd need like 2 or 3 signatures on a check. It's kind of similar to that. So the solution we have is both. It's using what are called threshold signatures. So it might be, between us here, we might say, well, Elena's got a 40% ranking, Gary's got a 20% ranking, Daniel, you've got the other 40% or whatever. And we can work out who can sign a transaction. So for companies like crypto exchanges or crypto custody services, it might be necessary you've got multiple people signing on stuff. But yeah, we're doing that, plus also using what's called HSM. So it's a hardware security module. So think a little bit like a nano ledger or a Trezor, where you have to plug that into your device to prove you are who you are as well. And also using, for the network layer, many of you will be familiar with VPN, which is virtual private network, which up till now has been pretty secure. We're using something which is the next generation on from that, which is called ZTN or ZTN, if you're on the east side of the Atlantic, which is Zero Trust Network. So this is something whereby each packet of data gets sent independently, and it goes to only a whitelisted address, and we'll only receive transactions from whitelisted addresses. So yeah, all that kind of stuff, Steve. But we're just doing some final testing on it because Elena keeps asking, where is it? Because she wants to look at it. But yeah, we should have something very soon. Quite happy. In fact, I'll share in the chat the website of the company I am working with. And you can check out what they're up to there. If anyone wants any details, the company's called LockBlock. And it's got multiple blocks that help lock things up. So the ability to lock your desktop, lock a device, lock the network, lock your keys and everything. So really, really interesting project. So anyone got anything else? Luke or Mike, you're just listening in there. Are you both okay on that?
Yeah, sorry.
Yeah.
Oh, okay, go ahead, Luke.
Oh, it's all right. Go.
No, go ahead, mate.
Luke, go for it. Otherwise, we're going to end up with a whole evening of no, after you.
Yeah. I'm just listening in. I'm interested in crypto, trading, Web 2, Web 3, all that kind of stuff. I'm mainly interested in learning more about crypto and what's been spoke about already with the wallet signatures, the next generation of VPN, all that kind of stuff, and how we can kind of like tie it into what we currently work with in our everyday life. So yeah, I'm just really here to just be a sponge.
Excellent. Well, good. Keep listening. If you've got any questions, if at any point any of us say anything you don't understand or you want to know more about, but please just dive in and ask away. Because the great thing is, as you say about things like crypto wallets and that, and Web3, when you start blending that into things like the metaverse, digital twins, this is where you see it start overlapping into what I call the real world as well. So yeah, we're in an interesting space. Well, thanks so long, Luke, and as I say, ask away. Mike, you were going to come in and...
Right, yeah. Sorry, I was just busy doing other things, mate. I was going to ask particularly, and just as a long-term angle, look more carefully at to what extent can many of these fantastic fintech, DLT, and other blockchain type applications be done through using only permission blockchains rather than ever needing to use public blockchains?
Okay, so let's quickly, I'll take a step back for a minute, because I'm always conscious that some people might not know what a permission blockchain is, what a private blockchain is and everything. So it's sometimes worthwhile just explaining what that is. If we start off to begin with, Bitcoin, which is a blockchain protocol that we use for Bitcoin cryptocurrency, that is a public, unpermissioned blockchain. By which I mean it's open to the public and it's unpermissioned in that nobody directly controls it as a centralized body. The corollary of that, or the antithesis of that, is, as you say, what's called a permission blockchain. So this is usually what are known as private permission blockchains. So an example of that would be some implementations of Hyperledger. Hyperledger being from the Linux Foundation. It's another blockchain, and some companies are implementing private versions of it. Now, the difference with that is that what it means is that you can set up a network of people that you trust and not people that you don't know. So the Bitcoin network, anyone can connect to it. You don't have to prove who you are or anything. Whereas with a permissioned network, somebody is controlling who's got access and who hasn't. So it's a little bit like this Zoom meeting, really, where you need the link to connect. It's kind of a private one in a way. What I'm seeing to date is that in financial services, they are all exploring private permissioned blockchains, which is completely understandable, because if I'm a bank, I don't want the ability for complete strangers to be able to access my data in some way. So that's where I'm seeing certainly things like Corda, which is a protocol by R3, which isn't quite a blockchain, but does use a distributed ledger. Hyperledger Fabric, that tends to be a private implementation as well. So to answer your question, Mike, what I'm seeing at the moment is that most of the implementations that are live are on private permission blockchains. Does that...
Well, this is kind of perhaps hopefully an interesting, important sort of, longer term sort of question topic that would, I guess, arise more and more, because apparently the whole sort of framework of, kind of technology and governance in the sort of developed world is all about a certain acceptable amount of traceability, full auditability, and full so-called public oversight. And apparently that's basically the kind of non-negotiable bottom line that regulators have everywhere in the developed world. And it would appear that the private permission blockchains tick all the boxes.
Yeah, and extending on that further, if we take a look at, there's a couple of other blockchain protocols as well. There's Stellar, which is the cryptocurrency XLM, and there's Ripple's XRP, which admittedly Ripple's got the court case with the SEC at the moment. Both of those cryptocurrencies adhere to what is known as the ISO 20022. It's 20,022, and ISO 20,022 is a new standard for payments. So it's something we're going to see, adopted and implemented through things like Swift network, which is what the banks use at the moment for doing payments and settlements. And I'm seeing XRP, so Ripple's product, and XLM with Lumens, and I think there's three others. I think IOTA might be an ISO standard one as well. And so, yeah, you're right, that they all follow a certain standard and certain methodology, which is generally better accepted. So it is possible that they will really take off in that way.
Because, this is just what I've been told. Obviously, there's so much to know. It's an amazingly complex field. I mean, it's not biochemistry where it's hopelessly dense, but it's definitely got so much, thousands of bits and pieces of extra depth that you can learn in what's going on in DLT. So formidably complicated, but basically it sounds like regulators are obviously way behind the curve on normal any technology, and obviously they want to encourage talent inflows and venture capital, and want to obviously boost for cutting edge innovation. And they're kind of usually, though the smart regulators anyway, seem to be quite sparing about interventions or regulations until they really know what's going on, which takes a long time. And when they can actually take, actions, which takes even longer to be able to effectively do anything about it. So from what I was told, one-on-one by fellows like Mark Carney, who's head of the BOE, after some of these conferences that he gave, he suggested that they just don't have enough public oversight, and it's a deal breaker. That's the kind of attitude they seem to have, that they have this short-term, medium-term, maybe 5-10 years of a sandbox, like a sand pit that the kiddies play, and they get a bit of blood, sweat and tears and mud or whatever in the sand pit, but it's fine because it's just a little controlled environment and mummy's next to them watching them. It's quite safe. And they need to play, and they need to expose a bit of whatever bacteria to keep them healthy, Otherwise they get AIDS in later life. So basically the sandbox current regulatory de facto framework seems to be a bit, necessarily temporary, and it's great for everybody, but it's going to be temporary for sure, and they will come on, require, quote unquote public oversight, maybe sooner rather than later, I guess.
Yeah. I was going to quickly offer a couple of thoughts on that. Having been involved in several of the UK FCA sandbox cohorts of people who've been part of that, which has been really interesting. So I think the FCA, who, for those who don't know, is the UK Financial Conduct Authority, so the regulator with responsibility for fiscal systemic risk and also consumer protection and that. And they were running a sandbox program, of which many companies were blockchain or DLT or crypto related. And I think they were using them to learn about the technology. So absolutely. So that they have come on from that. The other things I was going to question as well, the thing about crypto and that being more complex than biochemistry, having got a grade E in chemistry, which is pretty low, and accepting that my teacher and I thought that I didn't deserve that level. We actually thought I'd been overranked on that. I'd argue that crypto and blockchain actually isn't that complex.
Right.
It's because people keep looking at the technology, and from a regulatory perspective, you don't look at the technology, you look at the processes and procedures that the technology produces in some ways. And that's where it's interesting, because different regulators around the world have got different attitudes. And so if we take a look at what's going on in the United Arab Emirates, particularly Dubai, Abu Dhabi, and in some respects Qatar as well, there's a lot of innovation going on in that space, which is very crypto friendly.
Obviously, that's the leader.
They're very, very supportive. Then you take a look at the UK, which I'm conscious most people on the call here, with a couple of exceptions maybe, are UK based, so familiar. The UK government are all saying, we want to be a crypto innovation leader, blah, 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 blah. And then you look at the regulations that are being put in place. You look at things like the Financial Services and Markets Bill, which has got a lot of stuff around crypto assets. You take a look at the current consultation paper that's out until I think the end of this month, which is around crypto assets. You look at what we're doing with central bank digital currencies. They are being anything but crypto friendly.
Right.
So it's kind of interesting. But yeah, I think someone mentioned before, the other thing about regulation, it always lags behind what's actually happening.
Of course.
So you're always regulating what's already happened.
Of course. Necessarily. And of course, the regulators, let's say government in general, public officials are significant notches of pay grades below people in investment banking or venture capital or pretty much business, any big business really. So you would expect them to be, necessarily quite limited bandwidth to really understand things. That's just the nature of public, sector.
Yep.
But there are a few Gary Genslers who taught blockchain think they know a few things. But it seems that the sort of general pattern of merchants since time immemorial, or kind of free, kind of invisible hand of markets, is always, hey, race to make as much money as you can to maximize your shareholders. That's what you have to do. Competitively, if you don't do it, somebody else will do it. Until they often tend to kind of overreach with sort of public bads, or big public bads, certain problems around it, surrounding whatever business or technology, and then the heavy hand of regulation is kind of forced to sort of after the horse is bolted, to come in and try and pick up the piece and fix it and so on, and it's quite inefficient and suboptimal, whatever. So hopefully the smarter high-tech industries and probably financial services try to anticipate. They try to kind of preempt and sort of get inside the regulators' heads of what they're really trying to achieve, and hopefully preempt most of the heavy hand afterwards by making it a bit more. It doesn't have to be anywhere near perfect, but as long as it's not too much dramas, then it can keep going on without that unfortunate sort of hammer of all sorts of heavy stuff afterwards. So in other words, the sort of point of public oversight, according to, if you talk to a lot of these sort of top 20 regulatory kind of bodies and guys, they seem to behind the scenes think it's not very likely that public blockchains would be traceable enough to be seriously called public oversight.
Yep. Yeah. I think it's interesting as well that it's quite funny, because you'll always see regulators and law enforcement agencies always being quite disparaging about public blockchains and saying, oh, the dreadful, Bitcoin, it's all money laundering and criminal activity in there. Mm-hmm. The actual reality is, as we were sharing, I think on this call a couple of weeks ago, the Bitcoin blockchain is completely transparent. So you can see every transaction, you can track them, trace them and everything. So in some ways, it's kind of a bit of a red herring that I think they sometimes throw out there.
Well, that's a credible line, but then the counterpoint to that, just to kind of neatly slip it in right after that sequence, is you could say the same about financial, futures, for example. Mm-hmm. Oh, they're actually not speculative at all. It's not, sorry, they're not really for hedging at all. They're unnecessary kind of wash trades or something, because hedging is only 1%. But the whole point of those financial futures is that 1%. Like, yep. the hedging is the purpose of those, financial futures and whatnot. So just because it's 90%, 99% speculation, well, so what? It's the 1% is the purpose of it. Yep. And so the regulators fear that you have to, in the industry, figure out how to, disarm that criticism. Their critique would be, so okay, 1% is sort of, all this sort of bad actor stuff, but that's almost impossible to do, that kind of thing, with such ease and speed in developed country banks, because in developed country banks, roughly how much fines have been paid by the top 20 banks in the last 20 years?
Yep.
Take a guess.
Oh, I actually looked at the Transparency Task Force report on this a while ago. That I don't recall the numbers, but they are off the scale.
I mean, take a wild guess, anybody. How much top 20 banks paid in the last 20 years, just to US, UK, and Europe, fines actually paid? Anybody? Take a wild guess.
£1 billion.
Keep going.
And the rest.
Keep going.
10 billion. 10 billion.
Keep going.
10 billion.
Higher.
More than 10.
Come on, keep going.
100 billion pounds.
Keep going.
100, more than 100 billion.
Keep going.
1 trillion. I don't know. I mean, how much can it go?
600 billion has been paid already. So obviously that's like a quarter of their profits, so they could afford it, but it's still getting close to existential. I mean, any of their licenses can be pulled, right? So they are increasingly quite careful not to they try hard to have so many checks. I mean, the amount of checks, risk and control checks, they've got just hundreds of pages of it in any big investment bank. So basically the point is this public oversight, it starts to become an important criticism that you can't really just talk it away with just simple lines like, oh, only 1% is bad actors. That won't really cut it in the long term. It works in the short term, but that's not a defense enough. And don't forget,
I was going to quickly offer the counter on that. I briefly showed a slide which was the amount that being paid by banks, but I realised it was quite an old one. The reality is, all of the banks, particularly the big ones, they pay billions per year in fines and everything, but they treat it as a cost of doing business,
right?
Because no one goes to prison. And it would be interesting if they changed it so instead of paying fines, you sent your directors to prison. There was a case recently, I can't remember which bank it was, but they were prosecuted for some activity in the north of England where there was, I don't know if it was a pawnbroker or some sort of shop or whatever, which was taking millions of pounds in cash every week. And it was so off the scale out. But what people don't realise is that banks' only requirements, if they see a suspicious activity, is to report it as what's called a SARS, suspicious activity report, and then carry on. So they've discharged their duty by just reporting it suspicious. So it's a bit like you're seeing a crime being undertaken, and as long as you phone the police, you're okay, and you can let the crime carry on. It's kind of crazy. Sorry, Mike, conscious we've been going on with that for a while. I was conscious as well.
I mean, just to wrap up with 2 points there, the other points that will be discovered, this is going to come out more and more amongst these regulatory debates, which will heat up. You can pretty much see that steadily happening, is that it's just so cheap to set up a new, it costs less than $100 to set up your own coin, and you can close it the next day. And you can use it for heaps of money laundering for one day and close it the next day. And so in other words, the cost to set up and close a coin is next to nothing. And the money laundering is done by hundreds of loops in a day. So the way they do it is not commonly known at all. And luckily, it's not commonly discussed. We don't want it to be commonly discussed, but regulators will figure out that it is easy to effectively what I call muddy the waters. So water is clear. Anyone can see through water, but squids muddy the water. And that's what these money laundering experts, a lot of them Russian-speaking, do. They do hundreds of transactions, set up a new coin, close the next day, and they've done heaps of transactions that day. It's practically impossible to trace those hundreds of loops.
Yeah,
but the problem, I mean, the simple answer to that issue is that you have to have controls around what coins you transact, and you need to know, what's behind them. You can't just transact in a coin that some bad actor has set up. I mean, that's just not going to happen within the regulated world, and it wouldn't happen today either.
So, in other words, sorry.
I was just going to quickly say though that I read a lot of reports about money laundering because that's part of my role as a consultant, not because I'm looking at ways of doing money laundering before anyone asks. I always say I don't offer financial, criminal, or legal advice. But if you look at the reports around money laundering, crypto is tiny compared to other things. And I've been involved in some other industries where one of them was literally suitcases full of dollar bills being flown around. Another one, which is far more effective that people don't talk about, is fine art. Because if I've got a piece of art that is in a safe somewhere and I transfer title of that piece of art on a piece of paper and I hand it over to somebody, no one ever knows that's happened. And that can be millions of dollars worth of fine art locked up in a vault somewhere. So this stuff goes on. Sorry,
no. That's not remotely acceptable argument, because DLT will be hugely used for provenance. And yes, they are trying to crack down. You're right. There's so many other ways of doing money laundering. But the unique thing about crypto coins is that you can do it so quickly in one day and so cheaply and so totally hide it. But the worst thing is it's so hugely connected to Russia. And since a year ago, who's the global villain that nobody in the developed world, even Trump supporters would increasingly bother to even support or in any way? I mean, they just had an arrest warrant against Putin yesterday. It's fairly clear that crypto has a little bit of connection to Russian actors, and just the Russian connection.
Yeah.
Just take a look, mate. It's going to come to bite them pretty bad. Because those guys benefit a lot. Those guys need it and nobody else needs it. Apparently, permission blockchain could do most of the things. Yeah, okay, it requires a lot of readjustment, but they could do most of the wonderful blockchain projects that will zoom and boom. You just don't need the coin aspect at all. Or at least if you did have coins, maybe you could have 10 or 20 in quite a small controlled universe that is impossible to have. These, chain is only as strong as its weakest link. If you've got 20 coins, you can 100% have transparency. But if you've got more than hundreds of them, and right now we've got like 50,000, and they can open and close in one day, just that ability to open and close at the edges, it's those little coins, and effectively, it's the fraud around the edges. So it's not actually in the blockchain; it's the fraud around the edges. So if you only have 20 big coins, and they all have a license to lose. At the moment, there is no such thing as a license to lose. That's the whole point of the permission blockchain. Game theory of governance tells you you've got to have a plug that can be pulled, a license that can be lost, and there is no possibility of public oversight, period, in public blockchains. Regulators seem to quietly suggest that is a total deal breaker and that cannot change.
Yeah, I take that on board, but I do point out that not a single bank has lost its license in the last several years over money laundering. So it's interesting.
That's true. But they're all incredibly paranoid about this. Obviously, as you say, there is terrible stuff going on in banks, but it's mostly connected to the emerging market banks, where they're connected to states and connected to various nefarious groups. That's the whole big can of worms. But the point is, those guys heavily use crypto to facilitate. I mean, Dubai has obviously got a lot of interesting, colorful connections to difficult groups. So this is when Dubai becomes, as it is, the new center now that these top 3 crypto banks have been crippled in the US. That's going to create much more can of worms pretty soon.
Yeah, it's certainly an interesting thing. I was just shaking my head because one of the biggest areas for all of this nefarious activity is actually the City of London. Well, that's a conversation.
Well, I don't know if you talk to a lot of Dubai insiders, mate, but it's a fairly open secret that Dubai is the mega cash money laundering hub of the world right now.
Yeah, and again, this is not recommendation.
So, in other words, it's really going to go out of the frying pan into the fire with Dubai as its hub, and with Russians, 100,000 Russians newly moved to Dubai in recent years. I mean, this is a road to lots of trouble real fast.
Well, not all of those Russians are bad actors, of course.
Yep. Yeah.
Lots of wonderful Russians, okay, but it's a small number who can't easily be sanctioned, and that's what really ruins it. So it's not 80-20, it's 199. You only need 1% of bad apples to mess up a nice ecosystem. But it's curious that the crypto industry doesn't seem to take these debates very seriously. They kind of easily brush them aside and think it's no big deal. They're only setting up trouble for themselves later.
My experience is that isn't true, actually. I think that they do, it depends where you look. But if you look in any blockchain-based digital asset or crypto business, which actually wants to achieve a level of scale and credibility, all of them recognize the issue that needs to be addressed that you're talking about, and there's lots and lots of work that's going on, certainly with some specific chains around, adapting the way that the smart contracts work to handle the necessary messaging and controls, and indeed who runs the nodes and the governance of the nodes, to address all the points that you're raising as concerns.
But I mean, it's really cut and dried, mate. Nobody's really tried to prove that almost all of the current fantastic DLT projects cannot be done using less than 50 coins, and increasingly moving to fully these private permission blockchains only. Nobody's tried to say.
Right. So this is so in a way, to my mind, actually, what you're pointing to here is the biggest challenge, which is that the problem with a private permission chain is, by definition, it's private and permissioned, and you can have a Hyperledger one, or you can have an R3 Corda one, and I dare say someone can knock one up and create one quite quickly. Barriers to entry are quite low from a technology perspective. The problem is, how do you create businesses that have critical mass? And the problem with the private chains is that's very hard to do. The reason that the public DeFi type frameworks have the attraction they do is because they allow connection to a potentially much larger system. And when you're talking about banks paying £600 billion, in fines and that being a cost of business, that's a function of the fact that they have a mature, substantial business that generates heaps of cash. These digital ecosystems, they barely generate anything, and they're not viable businesses, most of them in themselves. And how do they become viable? Well, they can only become viable when you have the critical mass. And you're only going to get the critical mass if you either get a standard agreement as to which private permission blockchain to use, and good luck with that one, because that's not the way that the capitalist world works necessarily. Or you find a way to cross the bridge into the public permissionless chain space, but with some controls. If you look at a group like Polymath, which uses a Polkadot chain, and they're doing a huge amount of work to try and take that kind of public chain and introduce elements of control around it. And that, to my mind, has to be the way forward here.
I mean, it seems basically, of course, it's the infant industry argument. In industrial policy, infant industries are allowed to move fast and break things and not have such strict compliance on lots of things. That's great for everybody. But when they grow up and get bigger, the training wheels have to be kicked off, and they've got to start paying up more for more checks and balances and public oversight and sustainable whatever compliance. So it is expensive to have these controls, and it makes sense to have this sandbox early on. But it's getting close to time regulators are going to say more and more for the DLT industry to grow up and start paying these regulatory costs, and depending less on allowing those fringe stuff to go on.
Yeah. Folks, we're going to have to call a halt on this conversation, unfortunately, because we've only got a few minutes left. And it is a really important one. I completely agree that it's something that is pivotal to the long-term success. I just wanted to quickly say hi to Auntie, to Russell and to Andrew, who've all joined us. And just quickly, we've only got a few minutes left. Is there any particular things that you've come along today to ask a question about? Please dive on now and ask away.
So you mentioned Lockbox or something. Do you have
Block.
Block? Oh, yeah.
Block.
Do you have competitive? Yeah, Lockblock. Do you have competitive charts? I like to see competition charts of anything. Do you have of them or something else?
Yeah, we've done a comparison between what Lockblock offering is compared to Fireblocks, compared to Copper, Curve, or all of those. Yeah, we're developing that at the moment, so I'll share that with you when we've got that done.
Okay. Yeah, but not only that, do you have comparison charts of anything else? Like, because everyone's time is valuable, we can't just say, hey, we're gonna talk crypto, and then you message 100 people and they're like, no, I need to talk something else, because I have business to do. So what I'm suggesting is we should focus on, let's say, comparisons, because that's something that I would personally be very interested, and maybe others, okay, how does Ethereum compare to Polygon and Algorand? How does, let's say, one custody solution compare to another? How does one lending solution compare to another? And 1,000 other examples. That's what I would like to see,
Yeah. Okay. Well, certainly that's the kind of thing I think a lot of people are working on. So that's really good to know. So thanks for sharing that. Okay, folks, we're down to 1 minute left because I try and cut this off at the witching hour. And Andrew, I realise you've just joined the last few minutes, just as we're about to finish. So hello. But I don't know, has anyone got any final things that they'd like to add, question, share, or whatever before we close off for the day?
Just please post a few things on these lines in the group, mate, the permission stuff.
Say that one again, Mike.
If you just post a few lines, because I think this is inevitably going to become more and more of a big issue. So just keep a few pointers on that, if you don't mind, in the forum.
We'll suggest let's pick up on it next week. We'll go into it some more, and I can put some stuff together on that. Definitely.
Excellent, brilliant.
Right, Elena, sorry, you're about to say.
I just wanted to say thank you to everyone.
Another whirlwind tour of the crypto and blockchain world. So much to cover. Right, folks, I'm going to close it off there then. Say thank you very much, everyone.
Thank you so much.
Today. Sorry, it's been a bit frantic. I hope you all enjoyed it. Do come again. If you're watching this on YouTube later on, do remember to subscribe, like, and come and join the group as well.
It's a great time of week, actually. It's perfect quiet time. Brilliant. Thanks, mate. Cheers.
All right, cheers, folks.
Yeah, thank you very much, Gary.
Yes, bye now.